500 Sectors and Daily Update Dashboard Series. Just wanted to spend a minute today providing some additional context around why there are so many more dashboards this week. So let's start, and I mentioned this briefly yesterday. So we'll start with the sector rotation analysis. This is a way to better organize the 11 sectors of the market. I'm covering each one now. I have a dashboard for each one and wanted to line it up in this sector rotation order that intends to follow the market. So the orange line represents where the market is. The blue line represents where the actual economy is. The market's trying to predict where the economy is going and get the most value. For example, right at the peak of the market before the full bubble is energy. Energy costs go up, but then when things are at the top, investors are already moving into safer bets like healthcare, utilities, and real estate. And things kind of go from there, where investors get into technology, discretionary, communication services prior to the economy really taking off. So we'll start here with the S&P 500 sectors. Just wanted to get a better look at this information technology sector that we're looking at this week and the different subsectors. So it's broken down pretty evenly between software, semiconductors, and then technology hardware, storage, peripherals, and a few other slivers there representing the other smaller components of the market. And as we've been seeing, the majority of these companies are in the Bay Area, Northern California, but we've also got, obviously, Microsoft up in Cascadia. We've got a few in Texas as well. And even here in the Northeast on the East Coast. So, not to be forgotten about, we've even got Datadog here in Manhattan. So looking at the overall market, not as good of a day as Friday was. Most companies down marginally on the day for Monday, August 25th. The worst performer, Keurig Dr. Pepper. And this is due to the announcement that this company is going to split into two and also acquire Peet's Coffee. So the stock of the parent company of Peet's is doing really well today, or yesterday rather, and Keurig Dr. Pepper not so much. So the energy sector, not too interesting of a breakdown of the subsectors. That's why we provided more of the upstream, midstream, downstream, and retail breakdown of these companies a few weeks ago. I think that makes it more useful than just saying they're all in oil and gas or producing energy equipment and services. Utilities, similar. The subsector breakdown isn't that valuable. All the big ones are classified as electric, except for these that are classified as multi, but many of those electric ones also do gas, so we'll move on. Consumer staples, another safe bet. These are all the things consumers really have to buy, mostly down on the day. If we take a look at the largest subsector, Walmart leads there, and then food products. We've got PepsiCo and Mondelez as the two largest food product companies. Then Procter & Gamble in Cincinnati really dominates household products. And there's our tobacco companies, Philip Morris and Altria. Real estate, not going to spend too much time with real estate today. They were mostly down on Monday. Healthcare, not a great day for healthcare companies. I just want to take a quick look at the Northeast and point out two clusters. One, the pharmaceuticals cluster in New Jersey, and two, the biotechnology cluster up in Massachusetts and Boston. So a lot of healthcare on the East Coast, concentrated in those areas. Materials, can look at the fact that the majority of these are chemical companies, a couple in metals and mining, construction, and a few familiar names in containers and packaging. So moving on to our industrial sector, most industrial companies were down on Monday. Take a look at our three big airlines, United, Delta, and Southwest, all down on Monday. Consumer discretionary, these are the companies making things consumers don't have to buy. It's up to their discretion. And kind of a split day. You can see here Amazon really dominates the broadline retail space, with eBay only having a sliver of that. Now financials, this is an interesting sector because in that sector rotation analysis, they were right there with the safe bets, healthcare, utilities, and real estate, but a bit more of a nuanced role for financials in the market, obviously, because in many ways, these are the companies creating the entire market and moving it. You can see the concentration in Manhattan of the capital markets classified financial companies. Now, finally, communication services. Not really a broad geographic spread of this sector, concentrated on the East and the West Coast. We can see dominated by Google and Meta. So finally, the information technology sector. We can see that this sector is broken down pretty evenly between software, semiconductors, technology, hardware, and storage, except this little sliver of IT services companies. And we can look in to the worst performer of the day, Gartner. They're here in Connecticut, and can see that they've been continuing their decline ever since they cut their full year revenue forecast in their Q2 results. So the results were solid, but they had to downgrade their forecast, and it's been a long running market reaction to that, representing in a continued decline of Gartner's stock price. So one more time, the sector rotation analysis. We've got 11 sectors, and each one is associated with a different part of the market cycle. As we gather historical information, we might be able to make something useful about tracking where the economy was, where the market was, and where all these different sectors were in the year of 2025. So it's a lot of information, but hopefully that sector analysis makes it a little easier to work through. So that does it for today's update. Tomorrow, NVIDIA earnings after the market close. We'll see if that has an impact on things. Thanks as always for your time, and see you tomorrow.